Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain livestock comments. Well, the livestock are closed. We'll start with that. Fed fat cattle was the only red in the screen there, and the live cattle Fed finished down 20 cents. We had another $4 trading range. If you look at the April fat cattle, a $4.30 range, 209.87 to 205.50. We settled at 208 on our highs. So obviously some people stepping in here and thinking, well, maybe the worst is behind us. We've had, such a tremendous sell-off. We did gap open this morning, but today we still made a new low for the move, 205.52 in April, which was the lowest price since last May, May 28th. So you do the math, 5, 6, 7, 8, 9, 10, 11, 6-month low, a big percentage correction. And I wrote about this morning in my letter. Went out. I publish this letter every day. We came to this 207.70 level. That's a 62% retracement of the entire rally that we had, the year-long rally. We started at 181. We finished at 251. And we've hit all the retracements now. 224 was the 38%. We sat there for a couple of weeks. We set at 216 for about 2 weeks, which is the halfway back. And then finally, we've come down here to this 20, let's just call it 208, 207.70, 208, 62% retracement. So these are the big retracements that historically attract a lot of business. Now, they don't always hold. They're not perfect. You still have to make a decision when we hit these levels, but it's been a target. And again, we knew this was a risk. We didn't know for sure we'd get down here. But, and also, too, the whole 10 month, every time we make a new high, we look at what the retracements were. If you keep staying disciplined and running the retracements, sooner or later, they can give you some really good levels. Are they perfect? No. But they've given everybody a chance here to, first of all, have hedges and adjust hedges. So a big technical level here in April fat cattle. Okay, it's not too much to say about that. We'll see if that holds. We'll see if now all the longs have been flushed out. If you look at the March feeder cattle, same thing. We had a big rally from April to October, right? And how much of a percentage did we get back? Well, we gave back more than 62% on that. But again, we finished today higher. We made a new low for the move and then finished higher here, which is a positive. And where do we settle? Really close to this, the 62% retracement there as well. No, that's still above us now at 309. So is there room possibly to recover more and go higher? Absolutely. The low this morning was the lowest tick for March feeder cattle since July. So July, August, September, October, November, almost a 5-month low. And again, just a lot of damage done. After we'd had that outstanding rally, we started the rally at 267, topped out at 378. Called a $1.11 rally, and we gave back 83 cents of it. So about 77% of the rally up in smoke. So that's why we watch these technicals, not because they're perfect, but because they give us levels to help make decisions at. Moving over to the row crops, the news out was that possibly now we're going to have to wait and see if Japan and China and Taiwan and the United States can all make nice. Right now, China is not too happy about the fact that Japan said that they would come to the defense of Taiwan if someone, I don't know who that might be, but if someone invaded Taiwan. So that's going to be an issue. That could hold up some of the sales that we've been promised here with the Chinese since the meeting out on October 1st. Got to remember, though, we had a heck of a rally from October 1st lows to the highs last week, a $1.57 rally. You had an 88-cent rally. Excuse me. Yeah, I think it's 88, 83 to 88 cents. Can't remember exactly in new crop beans. So a real gift in the beans. Take advantage of it, right? And there's a lot of stuff to be angry about. But when we get 18-month highs in the beans, you've got new crop beans north of $11. Now, on October 1st, we were trading at 10.50. We were worried about what are we going to do if we go sub $10. So you've got to take what the market gives you. You have to take it all with a grain of salt. But when you get an 80-cent rally in new crop beans, now granted, who the hell wants to hedge new crop beans when it's November 25th, the year before? Well, not everybody, but it's certainly an opportunity now. How can you do that? Well, now we have the shorter dated options. You don't have to go out and buy 300 days worth of protection. You can buy a month or two. You can get protection on just through the USDA report on the 10th. So there are opportunities there, and I think it's something that everybody needs to take a look at. Now, some guys will never hedge. Some guys, you can never convince them that it makes sense to do any hedges. I get it. I'm not trying to proselytize. I just look at it like, if I've got risk, how can I manage the risk? If you're a farmer or producer, you're always bet long. So what's your risk? Your risk is you get your clock clean before you actually sell your grain, right? So that's why we hedge. We don't setting a hedge is not calling a top. Setting a hedge is not getting bearish. Setting a hedge is defending revenue. And if you approach it that way, I think certainly you'll have a better understanding of what it is I'm trying to do. And the grains, a choppy two-sided trade. March corn, a 3-cent trading range all day. My goodness, finished up a penny and a quarter. And the beans, we had another 11-cent trading range, finished up a penny and a half. So a lot of whipping around, a lot of people getting chopped up. This is not a market you want to be day trading in, particularly unless you've got deep pockets or are willing to take big swings. I think if you're a producer or even if you're a producer or a speculator, you have to pick your spots. You've got to be very, very selective. Otherwise, you could sit and get really, really chopped up when you have 11, 12-cent trading ranges and we turn around. The same can be said for the cattle. We had an $11 trading range in March feeder cattle today, 293 to 303. We had a $4.50 trading range in fat cattle. Lean hogs, a quieter day, just about a penny looking at April hogs. April hogs finished up 40 cents. So it is the holiday weekend. It is Tuesday. Tomorrow's Wednesday before Thanksgiving. I can't imagine we're going to have a whole lot of business. Keep your risk on paper. The other thing I'm looking at is what is going on with crude oil. Crude oil trading at 57.10. If it takes out 55.12, that'll be a new 5-year low. And the silver lining to that is diesel. If you use diesel, we've just dropped 15% in 4 days, from 270 to 240. I wrote about that in my letter again this morning. So while there's a lot of negative stuff out there, there's always something maybe you can take advantage of. Take a look at heating oil, the diesel, which is the diesel fuel hedge. That's had a big sell-off here. And so if you use a lot of diesel, might be something for you to take a look at. This is Chris Robinson. I am in Iowa today. I'm going to do Market to Market with Paul Yeager. Looking forward to that. It'll be the Thanksgiving episode. It is Tuesday. We're taping it today. You'll see it this weekend. Again, this is Chris. Have a good rest of the day. Have a safe holiday weekend. I'll be back at it tomorrow morning. 312-638-8868. Take care.